Welcome back, Daily Show. Continuing our conversations with Benjamin F. Edwards. John Morrissey is a financial advisor. And great to have you back in the studio. It's been a little bit.
I'm happy to be back, CJ. Thank you for having me on.
Well, today it's really nice because we're just going to do a little bit of market commentary, you know, and it feels like the last, especially a couple of years, but especially the last few months, it's just where do you start and where do you end the conversation?
A lot of people are asking that. There's a lot of noise in the market right now.
So, you know, let's just start, overall. Where are we sitting, right now, just from where we started maybe in the middle of the beginning of the year to where we're at in June?
Absolutely. So in February, March area, we've rallied a lot since then, and a lot of that story is profits.
Okay.
Company profits last quarter was up 28%.
Wow.
Per Reuters.
Wow.
And are expected to grow 22% this year in 2026.
And, honestly, to me, it's just fascinating because you see all the noise and like the news and everything else, but then you still see businesses continuing to grow. And
sure.
And so does, some of that market, I'm guessing, too.
Absolutely. And it actually, they beat consensus in general, just from what you've been reading since January.
Really?
Right? Yeah.
Wow.
That's why the market popped.
That makes...
Yeah.
Okay. It makes sense.
And there's also, Iran is definitely moving markets, but there's, less of a worry right now, at least right now, right?
Anything can change literally at any second.
There's less of a worry that we're going to have $200 oil.
Yeah. Well, and that was a significant concern for a couple of days, too.
There were a lot of headlines about it.
Yeah.
And it was a little bit more than, it was probably a good few weeks, couple weeks.
Well, and, we'll get into the market movers side of things in a second with the Strait because it is affecting, so much. It feels like, anyway, I'm not an expert, but it's like people are on pins and needles with the price of oil and everything else.
Yeah. So just to give you an idea, oil's trading about 90. It's been between a few weeks ago, it was about 110, and it's kind of staying within that range. Obviously, that can change with developments with Iran.
Oh, yeah.
But the Strait remains largely closed, and it's kind of a will they or won't they with, truce talks. It goes back and forth, and that will move oil prices. It'll move markets. If I remember correctly, don't quote me on that, but oil sold off, I think, 5% today.
Oh, wow.
Yeah.
Well, don't quote. We aren't, but I can see it being close.
Yeah.
Well, and it has been the way. It's interesting though to see how just when we hear energy markets and things like the oil per barrel and being over $100 and all, and just seeing how they really are watching and waiting in the Strait situation and just seeing how that really affects the greater market overall.
Well, it's not just gas prices, right? I think most people feel and look at gas prices, and that's something that you hopefully don't have to do multiple times a week is fill up your tank right now. But petroleum is used in the production of plastics, right?
Right.
And pretty much anything that we use has plastic in it, right?
Well, and see, not just plastic, fertilizer. Also.
Yeah, ammonia. There's a lot of ammonia that goes through the Strait.
Well, and so it's just, like I said, it's really just interesting. And the other thing that I find not interesting because we knew it was coming, but just the magnitude of spend when it comes to AI and just the investment that's being made. It's, I don't want to use the word remarkable, it's extraordinary. Because when you say $751 billion, that's video game numbers. I mean, that's a lot of money.
That's a projection, and that's a general consensus per Bloomberg.
Oh, wow.
For 2026.
Okay.
Which is a ton of money. And that's all that's going into the economy, right? So it's not just going to the chip, it's going to chip makers, it's going to people that build data centers, people that build cooling for the data centers, etc.
So it really is, it's not just, when people think of the term AI, it's not just necessarily the software itself or the tech, it's the whole ecosystem in which AI operates in.
Absolutely.
With the industry and infrastructure and things like that.
It's interesting because a lot of these tech companies were what you would say not capital heavy,
yeah,
right? If you make software, and you can just replicate that. You don't need if you're an auto manufacturer, you want to double the amount of cars you produce, you have to build a factory, tool the factory, etc. Software you can just copy. I mean, there's a little bit more involved in it, but it's a lot less capital intensive.
Well, it really is interesting to see how that really is working. I know that we'll talk about.
And sorry, I wanted to add a second point.
Yeah.
And now these companies, they're investing in data centers. They are becoming more capital intensive.
Well, and they aren't just, I guess, paper tigers anymore. At that point, they have the physical. Is that what that means? Mm-hmm. Interesting. So, okay, going into this, I know we're going to touch on it later, but the SpaceX IPO hitting the market, or the SpaceX going public, that's going to be a big thing on Friday.
There's a lot of talk around it.
Yeah, so let's talk about that in a second. But the big one too, I mean, we just talked about the Strait of Hormuz, and anything can happen at any given moment. It seems like, especially this last weekend, just boom, ba boom, ba boom. And so with that, it really, how is important is patience when it's watching these things play out. And I'm guessing that patience is dependent upon what position in life you are, what position of career you're at, profession. But it all has to, I'm sure, a waiting game at this point to see what's next.
Sure. Well, I will, touch on SpaceX briefly.
Yeah.
It's the biggest company to hit the market, right? Their projected company market cap, I've seen different numbers, but between $1.5 and $2 trillion just for SpaceX. And then they're also talking about Anthropic and OpenAI, which would be ChatGPT.
Well, that's going to
president at IPO because it's just so huge.
Wow, this is going to be really fast. What are you looking forward to the most? I guess in terms of just like what your career is, what your profession is, not in terms of what anyone's gains are or
Sure.
numbers, but is there like a nerdy point to this where you're like, man, I'm kind of curious to see?
It's very interesting.
Yeah.
Because, you hear a lot of people comparing this to 1999. I don't think the situations are similar. Nobody really knows because the companies now, the tech companies, they're producing profits, right? Back in 1999, you had all these internet companies and, they were rallying, but a lot of them, you almost could build a website and do an IPO back then.
Right.
So I don't think that it's wise to make a prediction on how this will go based off that. Personally, I don't know how it'll go because it's unprecedented.
Right.
But I certainly think it's going to be moving markets, and there's going to be a lot of talk about that.
This is just going to be, it's going to be fun to watch more than anything.
Sure.
Because I don't have any stake in the game, so it's definitely going to be fun. But, you know, I'm sure it's going to be really one of those things where you have to, not be, I'm sure there's a ton of different techniques, but truly just keeping an eye on it and seeing what happens.
Absolutely.
Wow.
Mm-hmm.
Okay, so going into this portion of the market and the commentary we're having, so CPI is right around what, 3.8% is what you gave me?
That was the last print, yes.
And so what does that mean?
Well, that's Consumer Price Index. That's the government basically releases this number, and they have a basket of goods and services that the average person uses, gas, housing, food, etc.
And so with that, I'm guessing this is where supply and demand comes back into play a little bit?
Sure.
Okay.
As a portion of it, supply and demand with oil, certainly. Energy's been driving up the CPI.
Makes sense.
We're at the highest we've been since 2020. It's been about 3 years.
Oh, wow.
Yeah.
And is a lot of, I don't want to ask you what the direct correlation is, but is a lot of it just the international stuff right now, or could be correlated to it?
A lot of the increase has been energy.
Energy, yeah. Okay, makes sense. Mm-hmm. Well, and so, and that's where we're at too, because it's not just gasoline. We talked about this earlier when we were talking about the Strait, and that's, the ammonia supply, the fertilizer, all of those things that truly do matter. And then you add on to it oil and the production of it. This might be an out of left field question to ask.
Sure.
But, so many times, like, you turn on the news or you hear a commentary and they're like, well, we don't get that much oil from the Strait, and you see gas prices still kind of. Does that really? I mean, I don't want to say why that is the case, but do you have any insight into that?
It's an international market.
Okay, that
right?
makes sense.
So if we're producing a lot of oil in the U.S., we're selling it internationally.
That makes sense.
Mm-hmm.
Okay, perfect, man. I just need, because I'm not familiar with it, and I think we hear that and we're like, well, what's the big deal here?
Well, it's like if you sold your house, for instance, right? You're most likely going to go to the highest bidder.
Absolutely.
Mm-hmm.
And this going into the AI stuff a little bit more, and that is, people aren't really estimating how important the chip shortage is, or chipflation is what you have written down and all that.
Yeah.
Is there still a shortage of some of these computer chips out there?
Absolutely.
Is there really? Wow.
Yeah. And chip companies, you can't just spin one up overnight. I've read somewhere. Well, it's true. I mean,
you're right.
Yeah, those factories are highly specialized. Wow. I've seen numbers, it takes several years to get it going.
Yeah.
So you can't just flip a switch, pull a lever, boom, chips are going to be in high supply again.
Yeah.
Yeah.
Well, and so with that though, and you hit on it. I mean, we're not just talking about your cell phone. We're talking, cars and battery. A lot of tech. Pretty much every essential technology anymore has some of these chips in them, or at least for
absolutely anything with a chip. Yeah. Automobiles for sure.
Yeah.
Mm-hmm.
Oh man, I'm still trying to figure out how our car became the biggest data center for us, or bigger data, analysis point for it. That's an interesting one we'll talk about is interest rates, and really because that's what I've heard about so much on any news station, and it's not a political preference thing at this point. It's just everyone has the debt clock, and we see that every once in a while. It's not as much as like '08 and '09 when that was like just on the forefront, but the interest rates are interesting to me. Yeah, and when it comes to that, take me through, your thoughts just on interest rates overall. Are they going to come down? What do they mean? Because to me, I hear we have had realtors on this show before that make the argument that interest rates are higher, but comparative to where they were decades ago, they're really still relatively low. I don't know what that means.
I think they're referring to when in the early 80s when there was mass inflation, interest rates our mortgage rates were probably 12%. I'm throwing a number out there, but they're way higher than 5.
It was totally in that number. It was that ballpark. And so, I don't know what the interest rate really means because I'm sure it's like energy. Whenever you change the interest rate, good or bad, plus or minus, it's going to affect other things throughout the economy.
Yeah, so what's going on there is they were hoping that they could reduce interest rates this year. Yeah. And there was actually it moved the markets pretty significantly on Friday, but there was a jobs number that came out that was a little higher than expected. So
it was like 190,000 jobs, I thought, higher than expected.
It could have been that number.
It was right around there. I don't want to give a pinpoint.
It was better than the consensus among the market, right? So what happened after that was so that they basically thought that they probably won't be able or would be as likely to be able to cut interest rates. Okay. And so that's going to affect everything, between a car payment. On a personal level, that'll affect your car payments, your mortgages, if you take out a loan. On company levels, that's typically not as good either because if they go to borrow money, it's more expensive for them.
That makes sense. Okay, so it's one of those tit for tat that what's best for everybody. Okay.
And it's based off a lot of things, right? Yeah. So it's going to be based off inflation because if you're investing money and you think inflation is going to be higher, you would expect a higher interest rate for the money that you give wherever you give.
And as we're wrapping this up, this has been great. I feel like this has really been a solid conversation. I wanted to ask you about this K-shaped economy. Yeah, because. So many times I feel like you see on like the CNBCs or, the business channels that everything's green, for the most part, and people are doing well. And, but you see, maybe folks like the average American that aren't really involved in day trade or whatever it takes, but they're going, man, I'm not doing as well. What is this K-shaped economy? What does it mean?
Well, so the markets don't coincide completely with the economy, right? They're more based off expectation of where the economy will be. Yeah. Okay. Right. Yeah. And if you look at it, about the top 10% roughly are spending about 50% of consumer spending. Yeah. Right. So if you're at the tippy top, you're probably invested in the market. And the market's going up, so you're feeling pretty good. Yeah. But if you're, down lower, for starters, you usually have, more constrained budget, right? So you're going to feel those price changes a lot more. And that's why market sentiment's fairly good right now. Consumer sentiment is at record lows.
Yeah, that makes sense. Okay. Yeah. And see, that does totally, I feel like that 100% correlates right now, with so many people. And, I gotta ask you: is the market pretty instant reactionary? Does it react pretty instantly anymore because of like just the way we receive news and technology? Or does it? Okay, I'm curious about that.
Yeah, a lot of a lot of it's algo trading. A lot of it's computers that are buying and selling incrementally.
I was curious because I'm sure decades ago, whenever you had something happen, it might take a couple of days or a couple of hours at least.
They have computers reading Twitter headlines.
Are you
and trading
kidding me?
I mean, that's not the only constraint, right? But it's a factor in the trading, right? So yeah, back in the 1980s, the Wall Street Journal would come out, and it would be next day, yesterday's news. Well,
we were talking about AI earlier, and before I let you go, a good question to ask. I know, is the AI worry going to affect the investment in which AI they invest in these AI companies? And what I mean by that is, like Joe Average American that's worried that AI is going to potentially take their job. Yeah. If there's enough of a consensus that they feel that way, does that affect anything? You know what I'm saying? That's interesting to me.
Ultimately, at the end of the day, most companies are going to take profits.
Yep, 100%.
And so if it's more profitable, then they're going to probably chase that.
Okay.
Yeah.
It's more than fair. John, before I let you go,
that being said, if there's enough public sentiment, our lawmakers might be able to do something about that.
That makes
sense. And I'm purely speculating.
Yeah.
And I don't,
Yeah.
but yes.
Well, it's just interesting. And I always like that when you come on. I mean, you present a lot of citations from Bloomberg, from Reuters, and Reuters, and we'll put all of that onto the interview too.
Sure.
It's just fantastic. Now, how do we get a hold of you? Because this has been a great conversation, but what if we want to learn more, and what if we want to have you help us help ourselves?
You can reach me 618-685-2813, located conveniently in Edwardsville.
There you go.
Also on Zoom. Well, not Zoom. We use equivalent of Zoom.
There
Teams.
You go.
Yeah.
I like it. And we'll link all those ways that we can get in touch with you. Thank you for your time today. It was wonderful.
Well, thanks for having me again, CJ.
We'll take a quick break, and we'll come back with more Daily Show next.
John Morrissey is a financial advisor with Benjamin F. Edwards. The information provided is for general informational purposes only and should not be considered personalized investment, tax, or legal advice. Investment strategies involve risk, including the possible loss of principal. Past performance is not indicative of future results. Individuals should consult with a qualified financial professional regarding their specific circumstances. Securities offered through Benjamin F. Edwards & Co., member FINRA, SIPC.